Welcome to this week's edition of Market Outlook. We said previously that the market is entering into a malaise state with heightened risk aversion, and the past few weeks have not been good for investors. Recall that the stock market had a good run in the first quarter, or rather, the first 2 months of the year from January to February, and had been chalked up gains of around 14%. Then it consolidated for 3 months until the current sell-off, which started in early May. And the STI has given up approximately 70% of that gains. The foremost primary reason for the sell-off can be attributed to the euro debt crisis. The Greece impasse was never really resolved, and it rears its ugly head again. This is also the reason why the market stayed flat during that period. The secondary reason we're saying is because of the weak first quarter corporate earnings that were released recently, and especially in the commodity sector, and we saw huge sell-offs in the commodity stocks like Wilmar, Olam, and a few others. I would say outlook at this point is uncertain and expect more volatility in the short term. Previously, we cited that the STI can only trend higher if corporate profits beat expectations, coupled with accommodative central banks' policies. So far, corporate profits have disappointed, and in the current political climate, any impact of loosening measures may not be long-lasting, but only a short-term reprieve. What's needed is a closure to the Greece impasse and ultimately the euro debt crisis. From now, we expect range-bound movement with a downward bias until there is further development. And let's look at the PE chart. We can see it is coming off the 4-year mean level. The -1 standard deviation forms the first level of support, and we are still some way from it. So expect more downside. And if things turn really bad, then we can expect a crisis valuation of -2 standard deviation. That's all for this week. See you again.